if you'll notice that circle up there, the RSI, we're on a 72, 72. So we got to respect that. RSI is core to my trading philosophy. Doesn't mean it has to stop going up. Markets can go irrational. Markets can go higher than you think they'll go. Markets can go lower than you think they can go. But this is this is the yellow light, and you're pretty close to the, are you going to gun it? Or are you going to stop? So that's where we're at, man. It's going to open higher. This is going to be even higher. I think the market's up right now. I got to feel we're near the top. It's technically a breakout. We had a little, what I thought was a stage 3 right here. And yesterday we broke out. You don't often see a breakout on a 72 RSI. Okay. It can happen. It's just not very common. So what does that mean? All that means is doesn't mean you have to get bearish. It is what it is, man. It just means that we're a little overbought here. You see over here last time this happened, and we got a little more green. So it can push up a little higher, tends to be the top, and then we pull back to the green. This one's been more of a slow grind than over here where we broke out and ran away and got really far from the green line. So the green line is the 20-day moving average. Definitely overbought. So there's some shakeup today in the Dow. Exxon's been dropped from the Dow. Raytheon's shocks me. Raytheon's on my buy and hold list. That's a new position. I'd be a buyer of Raytheon and Pfizer. So, if you look at the Dow, the support, previous resistance, or RSI extreme here on the Dow, which was the top, is now support over here where we just broke out. It bounced right off it. Look at that. Pulled back, and that's what they say. Previous resistance becomes support, right? That's how it works. Price has memory. That's what that's all about. In the book, I just call it price has memory. It just stops see where it stopped here? Where it was before. That pattern is so common on the way up and the way down that I just assume that's where it's going. So I just use it. Look at this. See where it stopped? Where it stopped before. So that's just so common that I just make it part of my strategy. Like I just assume it's going to the next one. So if the market's moving up and there's a resistance ahead, I assume that's where it's going. And that's, if you notice, that becomes my swing pattern. So if I'm looking at a stock, which one, let's show one that's going against me. Snap was one that I was buying the breakout here, and it didn't work. So I'm not stopped out yet. I don't get stopped out that easy. But the point I want to drive home is this previous high becomes my target. Why? Price has memory. So that gives me a logical target, and it gives me a plan. And the secret to trading, if there is such a thing as a secret, is that you map out the trade, that you have a plan. You have an entry, you have a target, you have a way of exiting, and you have a way of protecting yourself. And we can, go back and forth on what's the best way to do all of those, and, your way, whatever, as long as you're hitting those basic components. That is the trade. The trade is a trigger. Something causes you to enter a trade. For me, it's pretty simple. I follow the 4 stages of price movement. If you watched my newsletter or got my book, I don't know how you're trading if you don't have my book. You're weird. So the 4 stages of price movement is like this, right? So as we look at price, look, stage 1, stage 2, stage 3, stage 4, and then look, what was I trying to do? I'm trying to catch the breakout, right? You see over here? So you see how I begin to see that pattern? So if you first look at this, you may not see that pattern, right? Right out of the money flow. So the price pattern, where are we at here? Oh, let's go back to page 5. So this is core. Well, if I could find my own, I think it was at page 7. I'm a little behind on updating the newsletter. I need to do that today. So this pattern is the core to the strategy. He said you're weird by the book. So if you're looking at this, you may say, yeah, well, I don't see that. I know, because you haven't looked at 10,000 charts every day of every day of every day of the last 20 years. When you do, you get to see the pattern very clearly. So I saw the pattern in Snap. Now, it's not infallible, but it's a pattern. And what makes trading work is you're trading a system, and that when it doesn't work, you got to have something to protect yourself. That's part of trading. So we need to know when we're wrong, how we're going to handle that. And that, for me, will change from stock to stock. The way I handle it in AT&T will be different than the way I would handle it in a penny stock. So we're currently holding the pivot point of the stage 1. So remember, stage 1, stage 2, stage 3, stage 4, stage 1. Stage 1, stage 2, stage 3, stage 4. Now we're back. So we broke out and we pulled back. As long as we hold this zone in here, I'm okay. If we break it, I got to assume we're going to the next level. Price has memory, right? So I assume it's going to the next one. Where's the next one? Right around in there, which happens to coincide with the 200-day. Do I want to ride this all the way down? Because I have to make the assumption that's where it's going. Why? Because I don't know where price is going. Nobody does. Anybody thinks they know where stocks are going or delusional, stupid, or selling you something. And so if you think you know where it's going, you're one of the three: delusional, stupid, or you're trying to sell something. Maybe a little of all three. So by making that assumption, what does it do? It gives me rules, and the strategy to the game is having rules. And the rules don't have to be the same. There's a lot of ways. You're always going to get out of the market what you want out of the market. So, that's unfortunate. Let's look at some that worked great, though. You got to give them a little room. So Delta Airlines, I've been all on this trade. I've been all on this one because, while everybody else is talking about Tesla, I'm looking for the undervalued stocks. And yeah, you trade Tesla, it's going up. That's great. But in the meantime, if you weren't in Tesla, rather than fretting about Tesla, you need to catch the breakouts that are happening right here. So right here, we had a breakout. So we had a stage 1, stage 2, stage 3, very small. Notice what happened here, what's happening right now in the S&P 500. We're hitting the top, see? Right? So stage 4 decline. There's our stage 1. Stage 2's ripping higher. We get long on the breakout, runs up, kind of pulls back. This is where people get froggy and nervous, and maybe I should close it out. Or you could just wait. And now we're ripping higher. So target is what? Previous high. It's the exact same on every, like I just gave you the game. You're welcome. I just gave you how you swing trade. So everything you do for the rest of your life trying to figure it out is a waste of your time. I just gave it to you. So they're selling hot dreams out here. Hot fantasies. So what's my target? I have no idea where Delta's going. See how liberating that is? So I don't know, but guess what I do know? It's been here before. And so price has memory. And so you don't need a pen. Bro, I wrote it down in a book. You could buy the book. And bam, we're going right there. So now, what if we don't get there? We're going to keep our eye on this RSI. We got to respect the RSI. So here's what we do when we hit that hard RSI. We want to sell a little bit. So remember on this last breakout, we sold a little bit right here. But Gerald, you can't pick tops and bottoms. I know you can't, but I can. So now I may not get them all, but I'm gonna get them. So, we sold out some here, took some down, we've moved down. Now we're putting it back on, and we're looking to sell some here. And if it keeps on rolling, and we keep on riding with it. So the beautiful thing about this strategy, if a stock runs, you don't need it. What do? You just let it run. It just keeps on going. So if we look at Square, where are we at with Square? Shit, we ain't even had to spend more than, I haven't had to spend more than 3 seconds any given day analyzing my trade in Square. Next chart. Why? It's going straight up. It's on the other side of the green line. It's a gigantic, massive stage 2 breakout run. A couple times we thought it went into a stage 3. It tried to. Look at this. Extreme. That's usually when it stops. Look what happens when you hit these RSIs. It doesn't mean it's done going up, but it stops momentarily. Look. 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 If you don't understand this indicator, I don't know what you're doing, man. It doesn't mean it's done going up, but it does put in sideways action. Now, what could that tell you? Buy the breakouts. So when you get these boxes where the RSI is extreme and it goes sideways and then it breaks out of the box, what is that? Bullish? You can jump on that trade again and just keep riding it up. You could keep stacking it up, pushing this trade as hard as you want until it breaks down. Depends on how aggressive you want to trade with your terminology. So, I mean, there's a book out there. These are some old school traders. God, what's his? Now I just lost my train of thought. With the concept of the box. I mean, I didn't invent any of this. This is Darvis. Darvis from the 1920s traded with the box. These are boxes. If you don't get this, you'll never be a good trader. Look at these boxes. These boxes often coincide with the stage 3 and the stage 1, right? So stage 1, stage 2, stage 3, stage 4, stage 1. These are the boxes. And as you begin to watch price, you can see it inside of these boxes. Inside of these boxes. Oh my God. The Illuminati's gonna kill me, dude, for sharing this with you. Giving away Illuminati secrets here. Think of all the time you've been trading without knowing this. Just by the seat of your pants, trying to figure shit out. And then I come in with a plan every day. It's boring. My trading's boring because it's so repetitive and so easy that everybody else is worried. Like, where's this? I don't even spend 3 seconds. I don't know where any stock is going. But here's my edge, that I'm a pretty good stock picker. Pretty good. And you say, what do you mean? Like, I can just pick stocks. Like, I read Barron's, I read the Wall Street Journal, I observe business. I'm in the money flow every day. When I'm at a store, I look, well, is this publicly traded? Hey, what is this? And as I drive, it's in my free ebook, You Don't Have to Die Broke. I observe as I drive down the street. I say the ticker symbols in my mind. Public storage, 3.45% dividend yield. What is the PE? And I play these little games with myself. And I get out my phone and I look, oh, it's trading at a 23p. I should check that chart. And I'm just in the money flow of companies, right? And then I'm watching society and I'm looking at the 10, 11 sectors of the S&P 500. And I'm like, well, which one is the cheapest? Not which one is the one going up the most. So the NASDAQ's going up the most. So now we got people chasing those. I want to buy the ones that people aren't seeing right now. Air's breaking out. What's my target? $29. So what about the banking stocks? We're doing a triple leverage fund on that. Oh, I got something you're not even watching. Are you watching China? That's been breaking out. Or are you too busy to look at China? Trying to chase Tesla. So China, right there, breakout. Look at this. So now imagine if you're trading China, you're going to use a triple leverage fund called the yen. So, you're up $2 in the, 2 weeks here? Or did you not see China breaking out? I mean, it's in the damn news every day. China, Trump, like it's all right there, right? It's breaking out. Where's my target on China? $19. Look, you didn't notice that? Why didn't you notice that? So you see how this world can be? You got oil, bonds. What about Russia? Let's check in on Russia. Ooh, what's up with Russia? So Russia did a breakdown here. Look at this. It don't matter what country we're talking about, Bitcoin, crypto, soybeans, gold, it doesn't matter. It all follows the money flow. There's your breakout, and this is the Russian ETF. Look at this. RSI hit the bottom. There's your first buy signal if you're buying the stage 1. There's the stage 2 run up. The problem with Russia is a little jumpy. Look at this big drop down. So you got to be careful. And so this is like doing it every day. You got to learn. It's funny, the Twitter moves a lot like Russian index, the RSX. Twitter's very much like that. You'll be long Twitter and it'll just slam down below the 20 and then it'll jump right back. I don't know why Twitter trades that way. What, you can't trade countries? Yeah, so this is a beautiful thing, right? So you're following the news in Russia, and then look, it goes all the way where we would have thought it went. Bam, tags that 200, man. That's always a target, the 200, when you're way below it. Look at the support. We're talking about price has memory. Sold off, sold off, sold off. What does that tell you? That's your bottom. Put your stop there. You buy the breakout, and then it runs up. So you're still in this one. I'm just trying to give you examples of the money flows all around you, man. It's not caught up in just single stocks. It's in Brent crude. It's in gold. Let's look at the GLD. So what's the GLD? The other day I got heckled on Instagram because I said don't buy gold right now. And this guy, well, you know, gold's going to 10,000 and fiat. Like, okay, we get all that, bro. But in the meantime, the RSI is over 70. That tells me gold is topped out, dummy. So this is the greater fool theory. When you buy a stock and you see green up here, you're the fool. So if you're playing poker and you're wondering who's not very good and you're looking around, it's probably you. That's what this is telling you. Unless you're a day trader, that would be a different conversation, right? But we're not talking about day traders. We're just talking about traders. You don't buy when this is up here. You missed it. You wait. Why? All things go in 4 stages. Everything on planet Earth runs in these 4 stages. And then it'll run sideways, then it'll pull back, and then it'll run sideways. All you got to do is decide you want to follow it every day. That's it. So what happens now? Gold pulls back. We got a bottom. Technically, we're in a stage 4 decline, though. Can't buy it yet. You got to watch the histogram. So the histogram is still pointing to the downside. So you can't step in on gold yet. Can't step in on gold yet. You got to wait. This is the patience game. This is being a shark. But we got a big box building, right? Remember I talked about the box in the beginning? We got to be able to identify our boxes. So right now we got a big box, but everything's turning over. If this was to sell off, where do I think it'll go? 170. Why? That's the rules. I don't know that, but price has memory. If it breaks out to the top, I assume it'll go where? Here. If it breaks to the bottom, where do I assume? Previous low. Like see what I'm saying? I just create these rules that allows me to wait, to be patient. I'm not having to guess. So that's a big box. I don't like those boxes that big, man. We got to give this a little room to kind of work it out. It's not going to rip. If it's below the green line, it's bearish. If it's above the green line, it's bullish, right? So look at the big box we had going over here. This one lasted months, if you remember. So gold can go into these boxes for months. So if you look, what month is this? Started in April all the way to, when did it break out? Almost July. Big ass box. So look, bounced off, bounced off, bounced off, bounced off, bounced off, bounced off, and all the gold's going to 10,000. Okay, but it's got to break out of the box first, homie. That's how it works. So look over here. Where was the bottom? RSI was on an extreme or close to. It's just patterns. These things just play out the same because it's just human beings. Human beings are what move the market. Now, I know everybody thinks it's computers, but human beings program those computers. So see the histogram? Until it turns, there's no rush. So look over here. It didn't happen until it turned. See it? There's no rush until this turns. So we're over here. It's still pointing to the downside. That means the momentum is still to the downside. So be careful. If this breaks, you're going to 170 on gold. And that's totally normal movement. We've had a huge run up, right? What is an, I'm trying to think of a good one here. DraftKings is one I really like. Look at this box DraftKings has been building. It broke out. You should always want to back it up a little. Baby's got back. So find the boxes. See them? Woo, look at all the green. And look, RSI is on the low. That's your box. So once you can identify these boxes, look, there's your breakout, stage 2 breakout. So you got a stage 1, stage 2. Look how obvious this stage 3 is. We went into a stage 4 sell-off. This is when I got interested because I missed all of this. I missed it all. So now we're pulling back. Let me clean this up a little bit. So I'm constantly looking for what? To draw the box, constantly. And we started getting one in here. You remember, we got to wait a minute. What am I waiting for? I need the histogram to turn my way. We broke it. And remember, if you follow me much, you know what I say. The single most bullish thing you can have is for price to be going sideways, break the box. And I know this is like, well, we need to sell it. Okay. I would only sell half because if it comes right back into the box, it is extremely bullish. And that's what happened here. And then we broke out, we added, and it's kind of drifted. Are we going to sell it? No. Why? Price has memory. So look, it held that support. When and now this will confuse people. Why didn't we use this as support? That was a reversal. It came back in the box. When it comes back in the box, it negates this. For me, when I'm drawing lines. That's just a little, But even where it stopped there, if you take it over, it stopped on a support zone. So, but I usually negate that, and we're using this as the box. So what's the target? Previous high, around $42. Same pattern every time, right? Same pattern every time. We need some momentum, though. We need this thing to break out, man. I like it. DraftKings, SDC. I am completely out of that. I was in it for a long time. Wow. Look where it stopped, though, man. How beautiful. Exactly where you expected it to stop. Whoop. Right at support. What is that? It's pretty bullish, to be honest. We're still in a stage 4 decline. All the moving averages are aligned to the downside. 20, 10, 5. Everything is pointing down. Down. You've got to wait till this turns. Down, down. It's still too soon to get in this. Still too soon to get in this. But it's holding support. I would need to see this hold a little bit more, and I need to see this histogram turn, and then you might call this the bottom. And that would be buying the stage 1, just like you did over here. See, we need it to, to hold. When it held this second time right here, when it held that is super bullish. I mean, you know what I mean? Like right over in here, because look how long. I mean, you had this whole chunk of time where it held it. The longer it holds it, the better it gets. Yeah, SDC's doing a lot of advertising. They got some legal issues going on. I like the stock. I've had good runs in it. We had a great run here. It was like 100% return. And notice where the high was. Come on, man. Could it be any easier? Look at that. I mean, is it any easier? Completed swing trade. Extreme low, extreme high. There's your stage 2 breakout. There's your stage 1. I mean, does it get any easier, man? I mean, if you caught that, you probably should give the money back or give it to some poor people because that shit was too easy. I mean, you probably don't even deserve it because it was so easy. Let's see. Where are the utilities? I love to trade the utilities. I like to use the triple leverage on the utilities, though. I like to use triple leverage. Look at this overhead resistance we got going on here, though. We've scaled this back. We're in it. If you're trading inside the Money Flow Trading Society, we're in this one using the UTSL. That is a triple leveraged fund that trades utility companies, which are rather boring. But look at this top we keep hitting up against. You know, are we going to break out of this? I don't know, man. If we did, there's no area. We got to back up to a weekly chart. If we broke out, where could we go to? Woo! That's a long move right there, man. That's a 100% gain in the triple leverage fund. So, for all you greedy bastards, you know, if you're in that UTSL, let's see what that would be in the UTSL, just out of curiosity. So the triple leveraged, let's pull up the weekly. It's $23, becomes $55. So, you know, it'll be down a little bit. You know, the leverage throws off the numbers to the upside and the downside. So, my man Mike Tice, he's coming in. D-Boys, he cried. Market about to open. So, yeah, let's check the SPY. So the SPY broke out to all-time highs. We're going to open up. Imagine we're going to sell off. I don't see us going much higher. It's just not me, you know, not me trying to predict. That's just the art. I mean, we could, obviously. Oh, man. Let's see. Let's go to a 5-minute chart. Let's day trade. Hey, let's day trade $50 million in my paper trading account. And then or wait. So, you got to gap up. We're on the 5-minute chart. It gaps up and the RSI is already extreme. So if you're a day trader, RSI works on all levels. The system is fractal. See what happened on yesterday? You had the big gap up, and look, it was the high all the way across. Now you got a big gap up, probably the high. He said, don't turn Richard on me. Let's see. Yeah. We'll see how the day plays out, man. Pins set to gap down. What do we see going on in pins? Yeah. I've already taken profits on this one. This gap is going to be filled, so this should pull back, fill the gap. I like this company, but this is a little overpriced here, man. Discover's one I added to yesterday. I sold LCA, was a new trade of ours, the casino trade, and look at that bad boy go. Guess what our target was? All right, everybody did this one needs to give money to charity because the trading's too easy. Remember, the target is always to the left. Price has memory. There's the breakout. We hit our target. We sold some yesterday. It's going to be up to you guys if you want to sell some today. I might hold it. We already sold some yesterday, so that was a no-brainer. So you see, when you get a big stock that breaks out like this, just start watching it. You don't need to run up in it. You don't buy it when it has a green, okay? That was the top, pulls back. We get a chance to get in. We're patient. Now we're in. And then guess what? You set your target. Like, boom, swing trading. Easy peasy. Look. So now you want to scale out of this. That takes the risk off. That allows you to be able to handle a little bit of a pullback because you have less shares. Make sense? So you want to get out of some of your shares so that, because the risk, look how far away we are from this green line. Price will come back to this green line. Now the green line may move up a little, but it's coming back to this green line, just like it did here. Extreme, pulls back. So, man, oh man. What about Fox? That was one of my picks here recently that was very slow to get going. So we got into Fox over here, and then look at this long-ass sideways. Did we sell it when it dropped back down? No. I didn't. Why? Support. So there was the breakout. There's my stops over in here. We held it, waiting patiently. Now we're moving up. Where's the target? Remember, the 200 becomes the target when it's near previous high. Easy trading. Man. The Illuminati is not going to let me keep doing this. Let's see. Is Discover ripping? It should be ripping. Come on, Discover. So let's drop to a 5-minute chart. Woo! Look at that. Look at this 5-minute breakout yesterday. Richard is our king. Let's paper trade this. Let's see. If I was paper trading, I would have bought over here and I'd be selling here, and I made $1 bazillion. Yep. So we're moving up. Target is $58. The edge in all trading is that I'm trading a valuable company. The company, I want to say Morningstar's given this a 60 something. I mean, it was 60 something rating, or 60 something dollar value. So our edge is the fact that it's breaking out and that it's worth more money. So see how that works. Super cool. This is all part of the airline trade, bank trade. Those things are way undervalued. So we should see some money coming out of tech and going into, which it doesn't seem to want to come out. Tech just will not stop. It is crazy. That has been an amazing trade. So what do we see in Pfizer? Let's look at Pfizer. Pfizer had a lot of lessons in it. Man, look at these boxes. I mean, if you can't see these boxes, you see them, right? Look how tight these are. I mean, this is institutional money. And you'll find the more the institutional money, the tighter these boxes get, because they respect value. It's not all over the place like some of the momentum stocks. So stage 1, stage 2 breakout, stage 3, stage 4 decline. We tried to bottom fish in here. Why? We drew the box. We had 4 or 5 candles. We were on an extreme, and the MACD started ticking. That's everything I need to take a shot at the bottom. Whenever you're taking a shot at the bottom into a stage 4 decline, you have to respect the fact that you're going against the trend, okay? So always keep that in mind. Don't back up the truck there. You'd nibble. You're nibbling. It's like you're throwing a fishing line out and you want to see if anything's biting before you put all the poles down. Or you're chumming the water. Think of it like that. You're chumming the water, okay? So we started accumulating. It broke the box. I do not sell, almost never. Depends on the stock. God, my computer just went down. That's all right. I needed to get to work anyway. I rarely sell on that. I'll let it break the box. If I do, it's going to be half. But remember what I said, it comes back into the box is one of the most bullish signs you can have. And then we just ripped, and look where we stopped. The company is currently valued at $38, and look where it stopped, $38. There's no incentive for this stock to go higher unless the company's reevaluated and they have a new product or something causes to go higher. So I would be scaling down to a core holding. If it's a buy and hold, there's no need to hold a bunch of extra shares. Put that money in something else. Is Roku breaking out? Intel? I don't know. My computer just died on me, so it's fixing to turn off here. I'm sure we're going to have some weather stocks in play. Whenever you get these hurricanes, we have weather stocks. Anybody want to go live and ask a question while my computer dies on me? Quick question. Swing trading, how many shares is the minimum you should buy? Hey, good question. That is a good question. Let me turn this off. Let's reverse that. Hey, utility. Yeah, there you go. Let's see, reverse. So what's the minimum I would buy? Think of it in terms of lots. So for me, lots is an old school futures thing. I guess they still use that term. I don't trade futures anymore. But futures, you would think in terms of lot, or a complete lot is 100 shares. When I say a lot, I mean, I would think in terms of 3. So, because you need to be able to scale in, scale out. In other words, if you just bought 1 share, it's kind of hard to take profits. So you want to buy in increments where you can sell 1/4 to 1/5. The more money you have, you can sell smaller portions, but you need to be able to sell some, harvest, and what you're really doing there is as it's not about, I call it profit targets and locking in money, but it's really not about that. It's about taking capital, deleveraging the trade. Because as it goes higher and higher and higher, you're at risk of losing money. So you want to, as you're winning, if you're trading, it's not investing, trading, clear distinction. As it goes higher and higher and gets further and further away from that 20-day, you want to de-risk. So by selling off some shares, you're lowering your risk so that when it finally does turn, you don't lose near as much. So I like to think in terms of three, 3 or 4, buying 3 or 4 times. And if I get it right and I'm buying on a stage 1, I want to buy one of my lots there, maybe a second one there. Then it goes up, breaks out, I buy a third. I get a chance to buy again, and so I'll just keep easing in so that I can ease out the same way. I mean, that's what I'm looking to do. And if you got 10 or 15 of these going, any given day, you might be selling some on 2 or 3 trades. Well, that gave you a chunk of money that you can now push into another trade. And then some may be doing really bad and you get stopped out of half your position. You could have it where today you're stopped out of, I like to go half on the first stop out. Just like I got in, I want to get out in sections. So if I got stopped out on half and then I took profits on one, I now have a chunk of money, right? I could push that into the new trade or a new breakout. And so I'm just constantly managing it, and I call it rolling money forward. I'm trying to roll it forward and keep the balance growing. It's not about one single trade. What's the next Tesla? Come on, man. You think the Illuminati is going to let me tell you the next? I'll be dead by this afternoon if I gave you the next Tesla. You guys are trying to get me killed here. There are rules to being in the Illuminati, Some things you can't write about. Let's see. You ever notice Mark Zuckerberg doesn't teach on coding? Hey, Joe, explain to me again, please, what are the convenient of trading and investing in a Roth, SEP IRA for tax purposes, things in advance? They're tax sheltered. I don't trade inside of, well, I shouldn't say I don't. My trading account is not tax sheltered. My pure trading account is not tax sheltered. My dividends are tax sheltered. So inside of my trading account, I don't mind paying taxes. Like, that's what you do when you work. I mean, you make money, you pay taxes. But the buy and hold, dividend stuff I have inside of there, just because it's churning money. I collect $2,000 to $3,000 a month in dividends. That adds up. That's a big hit on taxes. So I tax shelter that. I don't think there's any reason to. I would tax shelter your buy and hold account, and then because I think it's going to take. This being real. Let me be real with you for a moment. It's going to take you 3 to 5 years to become a good trader, unless you're exceptional. It's a really hard game. It's a game of. It's going to take 3 to 5 years. Anybody who's been trading less than that, I don't believe them. I just don't. It's like saying you're going to go play in the NBA. It takes time, experience. You haven't even seen a full business cycle if you've been trading a year. Like you don't know jack shit. Like, you don't know anything. You may know some things you've learned, but you don't have any practical experience to back up those things, like going through a market meltdown, how to handle a run up. Like, these things are just going to take some time, and you're going to lose money. So I wouldn't bother putting a trading account in a taxable account. I would put all my buy and hold in there, and then as you got better and better, I trade around my buy and hold, but not a lot, man. But I do a little trading around my buy and hold. No, if you get into trading, you can anticipate losing money for the next 3 to 5 years. You're going to have to put money into it. I know this shocks people, but like in the real business world, if you opened a restaurant, you're going to be putting money in. You're probably not going to make money for a while. If you wanted to do any business that I know of, you're going to put money in. The idea that you're just going to roll up and I can give you my trading strategy and you'll trade it different than me. There's people that trade with me every day. They get stopped out of shit I didn't get stopped out of. I wrote the damn book. Like, how did they get stopped out and I didn't? just because everyone's going to do it a little different. There's nothing wrong with that. They may do it better than me. But the idea that you can just do it, and very few, some people do it, man. There's always natural people at anything, right? There's just some people that are good. That's what safety net is for sure. I just think if you come at it with that approach, like, hey, I'm going to spend the next 3 to 5 years trying to master trading and not really care about making money, it shocks me the way people approach it. It's like, well, I'm trying to make money. It's like, you don't know what you're doing. I wouldn't even worry about making money. And the other thing about trading that can confuse people, you can be a world-class trader and have 2 or 3 months where you lose money because the market's not in your favor. Your trading strategy isn't working right now for the way the market is set up. When the market starts going sideways, if you have a trend following strategy, you're going to have problems. So with the money flow, what I was trying to cover and answer is every possible scenario. Markets go sideways, markets run up, markets go sideways, markets run down. How do we trade all of that inside of that context? Like, how do we handle accumulation, a sideways movement? So, that money would have probably went to booze or weed. A little weed might help you trading too, man. Might calm everybody down. Like if you're on a 5-minute chart, maybe you smoke some weed and back it up to a daily chart so you can take your time with it. Or maybe the other way around. Maybe you need to get some Red Bull or whatever it is, get you going and drop the time frame. The longer your time frame, the easier trading gets. I'm convinced of that. A lot of people want to day trade to try to make money daily, man. That's tough, bro. That's tough, man. It's a tough way to trade. I would back it up. And the reason you'll see like I have 30, 40 trades going, it's because I'm backing it up and I'm trading like a day trader in the sense that I'm looking. But these trades take time to develop, Take time to develop. One of my friends is a day trader and he gets super high, handle stress. Yeah, man, day trading is stressful, dude. There ain't no need to do it. You can do the same. Oh, let's check in on Ashton, my man. Let's check in. Let's talk to a real trader. I got one question for Ashton. Come on, man.
Hey, good morning.
I got a question for you, bro. Are you in the Illuminati?
No, they just sent me my invitation just a couple days ago.
I get an invitation all the time. It's funny, man. That's just email that I get. It's so funny.
Yeah, they sent me an invitation in the mail, and all it said was, "You're invited."
Say, cool. I'll do TikTok videos for them. So,
That's
how many followers you up to on TikTok now?
I'm pushing about 15,400.
Woo!
But I'll tell you, man.
That's beautiful.
So there's a lot of conjecture about TikTok being banned. I don't think it's going to be banned. I think there's too much money at stake with that.
Right. That's just Trump flexing.
Yeah, I think it's a political move. Like Trump, hate Trump, doesn't matter. But I do think it's a political move. But there's a lot of opportunity right now on TikTok because a lot of people aren't pushing out content because they're fearing that it might be banned. So I've been pushing out a lot.
It's so much organic growth there, man.
Yeah, there is.
Right.
But just like you and I talked the other day, it's just those trolls over there come out of the woodwork, bro.
Yeah, I would ignore them. It's the roughest on TikTok. People are mean, dude.
Yeah. So I saw that you had a new trade recently, right? LCA.
Yeah, worked out good, huh?
Damn, that's a brilliant call on your part, bro. Because I had people come to me like, "Oh, were you an LCA?" I'm like, "No, I missed that one." But I'm in a couple others that are just taking off right now.
You know how I got in that though? This is the beautiful thing about social, right? A follower goes, "Hey, Gerald, you should check this out. I work for him."
Wow.
And I go, "Huh?" And it had already run up. It was sitting on like a 73 RSI. Yeah. So I'm like, ugh, I ain't buying there. And I just waited. Pulls back, goes side. You know what I mean? Like, you know what I'm talking about? And then I'm like, oh, here we go. Getting my chance.
Yeah, right when somebody brought that to my attention, it was last week. when it was setting up.
Right.
And at the time, I was just looking at, chunking money into investments rather than trades.
Right.
The past 2 weeks. And I was just like, this is setting up, and when it breaks out, it's going to run hard, and that's exactly what's happening. So,
and that's a good point you just said there. I think I confuse people sometimes when I'm talking, because I'll talk about, like, I pull money out of my trading account every quarter.
Yeah.
What they're missing, I've been trading 21 years. So a guy that's just started trading a year ago, you probably should be building up your account, not pulling money out.
Right.
Right. And so it's like listening to a Grant Cardone and you've never bought a rental property. His advice may not be appropriate to the guy just getting started. So you have to listen to the context, or take it all in context, right?
Right. And that's a great point, because, these day trading, I don't want to say gurus, but these day trading people you see on YouTube, right, that are trying to sell you courses.
Right.
They omit one very important thing, and that is, they push the agenda of, you learn how to day trade in 90 days. Well, first of all, let's use some logic. That's just not feasible. And second of all, they make it look so easy because they've been doing it for 12 years.
Right.
And, these obscene dollar amounts that they're making, some of them are legit, some aren't. But another thing they tend to omit is that they're trading with, just like we talked the other day, they're trading with $500,000 accounts.
Right. Yeah, and they fail to mention that. Like, there's a lot of things that tend to get either failed to mention or out of context.
Right. And a lot of people are have those rose-colored glasses on, and you only see what they want to see, but they tend to forget or not even think about those things. It's just, yes, this guy, you may be trading the same setup,
right,
with the same stock at the exact same time. But there's subtle nuances in there that you just don't know yet because you don't have the experience, right? And those subtle nuances are important.
Oh, they are. And as I put my book out, which was basically my trading plan, and then as you go through it and you start teaching it, you realize, damn, dude, there's a lot of shit I do that's not written here. A lot of nuances, or just having done it for so long, when the market opens up 400 points, I just kind of assume it's going to sell off. Like, a lot of little things that are hard to write about. It's experience, right?
Right. And I'm sure you get asked the question all the time, because I get asked, well, how did you know that this was going to happen?
Right.
I was like, well, I didn't, but I had an intuition, just because
right.
I just knew, or I didn't know, but I just had a feeling. It's just, you can't teach those things. Just like what you said, it just comes with experience, man.
I always equate to kind of like sports, like a guy takes a crazy three-pointer. He just felt that he was going to make it.
Yeah.
In a normal game, coach would be like, what are you doing? Like, but he knew that was the shot to take.
Yeah,
he could
that's
just,
a great point.
How do you teach flow like that? It's hard, dude. Because then I'll get onto people like, hey, dummy, why'd you sell this stock? And then I sell one in a similar setup. But over here, I'm like, look, it held support. But over here, I just, knowing the company, seeing what's going on, I'm looking at a bigger picture. I'm seeing oil get crushed. So I'm like, cool, we're cutting this stock in half because of other things, not just that chart.
Right.
And then,
yeah. Regardless of your trading strategy, right? Because there's a million ways to skin a cat, right?
Right.
Regardless of your strategy, there's always a shade of gray.
There is.
There's always a lot of give and take, and those come with that shade of gray falls into the subtle nuances with experience, right? So, if you and I say, okay, well, I'm selling some here, well, yeah, but it hasn't broken below the 20.
Right.
And you say, yeah, but, using the box as an example, that you mentioned the box.
Right.
Well, that's technically not part of the strategy.
Right.
But it's an onset of the strategy. Right.
It gets nuanced, and I know that confuses people at times. One of the things I did with stop losses, I don't use hard stops unless it's a crazy stock. I'll use hard stops, like, something crazy. But I've gone to this, and I've been doing this more and more and more, where if it breaks support and I want to get out, I just sell half and I wait to see tomorrow again. Because we're seeing so many of these, literally the next day it just turns around.
Right.
And you know, I've been liking that. I've been liking that idea. Just keep cutting it. If it drops another day, cut it in half again,
Right.
and you know, and give it a minute because so many of them have been just turning around after going down for a second, and
Yeah.
then and getting right back in the box, man. I bet.
And see, and there, that's another thing that's based on experience too,
Right.
because new traders don't want to get in the habit of
Right.
constantly selling their position. But you know, and one thing that people need to understand is like whenever you do that or whenever I do that,
Hmm.
it doesn't happen a lot.
Right.
You know,
Yeah.
that is the minority, right? And
Right.
so people tend to make that the majority of the time to where they're just spinning the wheels. Right?
Yeah, that's another great. It is confusing because they'll hear me say, you know, you're in a trade, hold it, give it a chance to work, and then sometimes I don't do that, and they're like, why didn't you do that? It's because well, it's a lot of other information I took in that made me change my mind. It
Right.
wasn't just this chart and just this stock, you know.
Yep.
And that gets difficult. And that's like you said, that's just experience and doing it a lot. And even then, though, you're sometimes your intuition's wrong. I mean,
Oh, absolutely. Yeah.
I was feeling bad. I was really convinced about the airline and the bank. The regional banks are going to go up. They're the cheapest in the market. Tech is overvalued. As money comes out, it's going to look for value. These are going to go up. And we started to rip, and then it pulled back. And I was like, damn, I hate it. I hate recommending something, and then it goes against you, you know? It kills me.
That's how I felt with my first trade with Nikola. You know, it's just
It hurts.
I underestimated on how fast it could move.
Right.
That was my mistake. So yeah, I mean, your intuition is not 100% because if it was, you know, everybody would be billionaires, right?
Right. For sure.
But you know, there's a good point. You know, with the market being white hot, you know, it's weird though because the SPY is overbought right now, but I'm seeing setups all over the place, man.
I have been too, and I hate pushing it when the RS, you know, I'm sure you know it, when it's 70 plus RSI. I hate pushing it, but I mean when we're breaking out, we're breaking out. I mean,
Yeah, I started a trade in Shake Shack last week, strictly because it was breaking above the 20 and it broke above it cleanly.
right?
But you know, it's high on the RSI. But I was like, hey, you know what? This is going to be a long-term trade for me. And whenever it breaks above the 200, then you know you need to be prepared to hold it for a longer period of time.
Somebody just told me, are you in DraftKings?
Oh yeah.
Someone just told me it's breaking out.
It's got some resistance around
Woo!
775, somewhere around there.
Yeah, DraftKings is up almost 8% right now.
I know it's DraftKings is establishing a nice little zone right now, but it needs to break that 37.75 resistance
Right.
at $38, and then if it does that, then we're going up to $40, no problem. I think.
Yeah, I think I had a target of 42. If we hit that with some strength, I may not sell. There's another one. I would ordinarily say 42 target. That's the way you do it. There are times when I go, hey, don't sell any on this.
Right.
Because I know, I can just tell it's going higher, man. Like it's ripping. Just don't sell any. Let it go.
Yeah. And this DraftKings for me is an investment that I'm trading around, and you know, it's holding steady right now, and it's shooting up the way it is. And sports really aren't even in
Right.
inception.
I know this thing could go so much higher, dude. This could be a $70. So, yep, a lot of these are breaking out, man. Let me,
And you would think that with the market being as hot as it is and as high as it is, that it would, you know, a lot of these setups would be, you know, high on the R side too. But I'm seeing a lot of setups just all over the place, man.
where's Delta? Delta's been on my mind. Yeah, it's holding.
Yeah, the regional banks had a nice day yesterday. Yeah.
I'm doing an experiment. You know, I follow a lot of triple leverage funds. I got about 50 of them I follow. But
Yeah, I have a watch list. One of my watch lists, I have several watch lists. One of my watch lists is just for triple leveraged funds. Yep.
and I put together an account. It's only 10 grand in this account, and all I'm trading in that account is triple leverage funds, only to the upside and only breakouts. And I'm using hard stops, and I'm just experimenting with the idea of trading, you know, 5 to 10 of these at a time, $1,000 positions.
That's funny because I'm doing the exact
Are
same
you?
thing.
Yeah. just comparing that to my regular trading, and I tried this once before, and then I ended up getting sidetracked. So I'm gonna try it again. Yeah.
So yeah, I only have a position in 3 of them right now. I got a position in DPST, a position in UTSL. I just got rid of a position in DRN because that one's just too slow for me, and then I'm in a TQQQ.
Oh, what is DQQ?
T is a Tom.
Oh, triple Qs. Yeah, how long you been in that one, dude?
You see where it dipped below the 20 the last time?
Right. You got in on that, on the breakout?
Yep.
Nice.
Yeah, that's a technology one, and obviously tech has
been on fire.
Does not seem to cool off right now. So.
Yeah, and it might have a little room to the upside. I mean, man.
Yeah.
Where's the SPY? We're moving up, man. Everything looks good. Raytheon got taken out of the Dow.
Yeah, Raytheon, Pfizer, and Exxon.
I can't believe Exxon got taken out. Exxon.
It all has a lot to do with Apple doing their split.
Right.
Yeah.
My time's about to end, man. I got to get to work. Got a hurricane coming. Thank you, Mel. The timekeeper has spoken.
All right, my friend.
All right.
See you later.
All right, later, dude. That's Ashton. If you guys don't follow him, you should. Let's see. What's the difference between your trading accounts? Yeah, I'm not a big FX guy, man. It's a good way to lose a lot of money. If you're a good trader and you're on it and you want to play, I'm not against trading Forex. You really got to be watching it. You can't trade the way I trade with no stops and do it. Yeah. Laying people off is good for the airlines, though. You don't want to learn more about Forex. You need to learn to trade stocks, bro. Yeah, DraftKings, big move up. That's good. I got a big-ass position in that, about 10 grand. Starbucks, man, I got logged in my account. It's all green today. I'll be playing some money songs later. I got a feeling. This is on E-Trade. This is stockcharts.com. Hey, if you go to my bio, and you'll see, if you click my bio link, you're going to see a link to my podcast. Get the free ebook. You don't have to die broke. You could buy my trading book there. Just put in 39 or 60. Don't be stupid. It's a PayPal me, and I'll send it to you. Get on my newsletter. It's all free. I got an e-course coming up that's free. The 17 Steps to the Science of Getting Rich, all free. All this shit. I have 2 different podcasts. If you think you're somebody who should be on my podcast, let me know. But don't come at me with some bullshit promoting yourself. You need to bring some value to why anybody should listen to you. You guys be good. What's up, YouTube? Got rid of these weirdos from Instagram. Like I told them, if you go to my bio, I think it's on YouTube too at the top, man. None of this stuff's fancy, just shit I put together. And I have a podcast that's on Anchor and Spotify. It's mostly about trading and my thoughts on trading. You can get my free book. This is buy the trading book. Get to the newsletter. I'm usually a day or 2 behind updating the newsletter. If you want it in real time, that's what the Money Flow Trading Society is all about. People trade with me on that. I don't know why I got it on here twice. Oh, that's if you want to just subscribe. I send out some emails. I don't do that as much as I should. There's a link to a free ebook, Science of Getting Rich. It's my favorite book. You can get it on Amazon super cheap, but there's an ebook version. That's about it, man. The YouTube channel. YouTube's been kind of growing. I think I'm at 5,000. I don't know where. Look at that. Yeah, I added 100 this week. So, we'll see. I need to fancy these up a bit, though, huh? I just don't do any editing. It's one shot, one take for me. I don't edit podcasts, so if I say something stupid, it's because I said something stupid. I don't edit videos. They're all one take, one shot. A lot of guys spend a lot of time editing. I don't know. If you got time to edit, it tells me you're not doing a lot of work in life. Unless you got a professional editor or something, I guess. Maybe I think I need to do that. So Anyway, you guys be good.